Welcome to The Explainer. Today, we're diving deep into the crypto market, which, as of late October 2025, is sending some seriously conflicting signals. I mean, on one hand, you can feel the fear in the air. It's a sea of red out there. But on the other hand, the long-term foundations, they actually look stronger than ever. So let's try to make some sense of it all. We're going to start with just one number, because right now, this single figure, it pretty much captures the entire mood of the market. 29.
So, that score of 29 comes straight from the Crypto Fear and Greed Index, and it is screaming fear among investors. Now, this is a classic double-edged sword, right? On one hand, extreme fear can be what they call a contrarian indicator, a sign that it might be a good time to buy, but it also points to some serious, underlying uncertainty that you just can't ignore.
So the big question is, what's actually driving all this fear? It's not just some vague feeling in the air. It's being fueled by two major, and I mean major, factors that are really shaking investor confidence right now.
First up, we literally just witnessed a historic shift. For years, Uptober has been a pretty reliable bullish trend for crypto. But not this year. Bitcoin just closed its first red October in 7 years. And look, this isn't just a small dip. It's the breaking of a long-standing pattern, and it pretty much confirms we're in a broader period of weakness. And second, and folks, this is the really crucial point, we're seeing institutional sentiment flip, and flip dramatically. In just one single 24-hour period, spot Bitcoin ETFs in the US saw a record-breaking net outflow of over $672 million. That is a massive signal that the big money is getting really nervous.
But the pressure isn't just coming from inside the crypto world. Oh no, the macroeconomic picture is just as challenging, if not more so. And let's talk about the biggest player in the room, the Federal Reserve. This quote from Fidelity Digital Assets just captures the situation perfectly. The Fed holds enormous sway over risk assets like crypto, and their latest policy decisions have put the entire market on high alert, and for a very good reason.
So how exactly is the Fed tightening the screws? Well, first, they've completely taken the expected rate cuts off the table. But even more than that, there's now what the market perceives as an 18% chance of an interest rate hike. This policy is like a vacuum cleaner for liquidity. It just sucks money out of the financial system, forcing capital to flee from higher risk assets. And yep, that absolutely includes Bitcoin and the entire crypto market.
All right, so that's the short-term view, and I get it. It's filled with fear, massive outflows, and macroeconomic pressure. It sounds pretty bleak, but what happens if we zoom out? If we look beyond the day-to-day price chaos, a very different and honestly a much more optimistic story starts to unfold.
With all this negative pressure just piling on, you really have to ask yourself, is there any real reason left for long-term optimism? Well, if you actually look at the fundamental data, the answer is, believe it or not, a surprising yes.
A huge shift is happening right now in the regulatory landscape, as this slide shows. We're finally moving away from that old, adversarial approach of regulation by enforcement. Instead, the SEC and the CFTC have started what they're calling a new era of collaboration. They're actively working together on a unified market structure bill. And for long-term growth, this kind of regulatory clarity is probably the single most important piece of the puzzle.
In this number, this represents another powerful long-term trend that's been happening quietly in the background: real corporate adoption.
And look, this trend is about way more than just a number. The count of public companies adding Bitcoin to their balance sheets has just exploded from 1 to over 75. This shows the asset class is maturing, and it's not just about passively holding it either. Key players are proving that corporate integration is incredibly profitable. We're seeing some post huge gains from their Bitcoin strategy, and others are just smashing earnings expectations with over $1 billion in transaction revenue. So even while the broader market is taking a beating, specific catalysts and narratives are creating these little pockets of opportunity, especially if you know where to look in the altcoin market. So here are 3 distinct areas that are kind of bucking the trend. First, you've got a huge potential catalyst for XRP, with reports that Canary Capital is aiming for a mid-November launch for a spot ETF. Second, institutional belief in Solana remains incredibly strong. Its ETF products actually recorded $117 million in inflows despite all the market fear. And finally, the privacy coin sector as a whole is showing incredible strength, with coins like Zcash up over 7%. Okay, so how do we take all this information, the fear, the hope, the good, the bad, and form a strategy that actually makes sense? Here's a simple strategic playbook for navigating this really volatile market. All right,
First things first, all eyes should be on the Bitcoin Dominance Index. It's currently very high, sitting at 59.4%. But what does that actually mean for your strategy?
Well, a high dominant score like this signals what we call a Bitcoin season. Think of it like a flight to safety. Capital is flowing out of the smaller, riskier altcoins and into the perceived safety of Big Daddy Bitcoin. This suggests it's probably wise to be very cautious with smaller alts until we see this metric start to fall, which would signal the potential start of an alt season.
So, given everything we've just gone through, your strategy right now should be defensive, plain and simple. Step 1, prioritize protecting your capital above everything else. Step 2, limit your leverage. Seriously, the unpredictable price swings we're seeing can and will wipe out leverage positions in an instant. And step 3, just wait for clarity. Keep a close eye on those ETF fund flows and any news on that crypto market bill before you make any major moves.
And that really brings us to the core of the issue, doesn't it? The market is well and truly at a crossroads. The short-term fear is being driven by very real economic pressures and big-time institutional selling. But at the exact same time, the long-term foundations of regulation and corporate adoption are quietly getting stronger by the day. This leaves every investor with one key question. Which signal and which timeline are you going to follow? What's your take? Can Bitcoin hold key support against all this pressure? Let us know.